The financial system as we know it could be completely upended by cryptocurrencies, calling into question the need for traditional financial infrastructure in its current form. However, what are the benefits and drawbacks of using cryptocurrency? How do you choose where to put your money, or even if you should put any money in at all? Hello everyone, and welcome to a brand new video on the channel. Today, we're going to talk about why Bitcoin is a smart investment, understanding its potential for growth. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Don't worry if the concept of cryptocurrency leaves you feeling a little bewildered. We are here to provide a rundown of the benefits and drawbacks of cryptocurrencies so that you may have an understanding of everything that is necessary to know. Check out our beginner's guide to cryptocurrencies if you're still having trouble figuring things out. The many benefits of using cryptocurrency. Despite the fact that cryptocurrencies have only been around since 2009, when Bitcoin, for example, was first introduced, it is clear that they are here to stay, bringing with them a host of advantages. If you are aware of how to take advantage of it, the world of cryptocurrencies has a lot to offer, including the possibility of earning substantial returns, the ability to trade cryptocurrencies around the clock on a highly protected and open infrastructure, and much more. Number 1. Extremely high risk, with the possibility of an extremely large gain. There are over 10,000 different cryptocurrencies available for purchase right now, and each one comes with its own unique set of peculiarities. However, there are a few characteristics that are shared by all cryptocurrencies, such as their susceptibility to abrupt price increases and decreases. The supply of coins produced by miners and the demand for those coins from buyers are the primary factors that determine price. And the interplay of supply and demand can lead to substantial financial gains. For example, the price of Ethereum more than doubled from July 2021 to December 2021, providing a windfall for early adopters of the cryptocurrency who are able to purchase it at a lower price. Number 2. The cryptocurrency market is intrinsically safe because of the blockchain technology that underpins it. The blockchain technology that underpins cryptocurrencies is responsible for a number of important advantages that aren't directly related to the digital currencies themselves. The blockchain is a decentralized data storage ledger that keeps a record of every transaction that is carried out on it. When data is added to a blockchain, it can never be removed once it has been recorded there. Because it is maintained in a decentralized manner among several computers, it is impossible for a hacker to access the entire chain at once. This means that any information that is kept in it is protected for good. Number 3. Say goodbye to conventional banking and hello to a financial system that is more open and equitable. Our entire monetary system is predicated on the activities of third-party intermediaries that handle the processing of transactions. Because of this, whenever you complete a transaction, you are putting your faith in one or more of these middlemen. And the economic downturn that occurred in the early 2000s caused a lot of people to question whether or not this was a smart move. A different option is provided by the blockchain and digital money. Because they are viewable by everyone, everywhere, you are able to participate in the financial markets and conduct transactions without the need for any kind of intermediary at all. Number 4. Transactions in cryptocurrency can take place at any time. One more benefit that cryptocurrencies have over banks is that the markets for cryptocurrencies are always accessible to buyers and sellers. You don't have to wait for the NYSE, NASDAQ, or any other exchange to start trading for the day in order to buy, sell, or trade cryptocurrencies because coins are created and transactions are recorded around the clock. Because of the significant impact that this has had, regular stock exchanges are investigating the possibility of trading equities outside of the normal banking hours, although this may still be quite some time in the future. Therefore, investors who are constantly on the move may find that crypto is the most convenient option to create returns outside of typical business hours. Number 5. Cryptocurrencies might offer a hedge against inflation for investors. Due to the fact that cryptocurrencies are not pegged to any one fiat currency or economy, their value is determined by factors such as worldwide demand rather than, for example, national inflation. But what about the inflation of the cryptocurrency itself? As an investor, you may, for the most part, relax and enjoy the fruits of your labor. Because there is a limit on the total number of coins that may be produced, there will be no unchecked growth in the money supply and thus no inflation. This method is effective in warding off inflation in either case, since certain cryptocurrencies, such as Bitcoin, have an overall cap while others, such as Ethereum, have an annual cap. The drawbacks of utilizing cryptocurrency. There's a lot of glitz surrounding cryptocurrencies, but do bright prospects actually lie ahead for the industry? Let's take a look at some of the problems that come along with it. Some problems are simple to solve, while others are more difficult, but it is important to remember all of them. Number 1. It takes time and effort to fully grasp how cryptocurrency works. Understanding cryptocurrencies may require some time and effort on your part. If you were not born into the digital age, understanding the concept of cryptocurrencies, let alone blockchain technology, may not come naturally to you at all. Additionally, trying to invest in something that you don't have a solid grasp on is, in and of itself, a risky endeavor. Even if there is a wealth of information available to you online, such as M26's blog series on cryptocurrencies, you will still need to commit some time to gaining a thorough comprehension of the benefits and drawbacks of investing in Bitcoin. Number 2. An investment in cryptocurrencies might be very risky due to the market's volatility. Although the price of a cryptocurrency has the potential to soar to dizzying heights with accompanying benefits for investors, it also has the potential to plummet to frightening lows in the same amount of time. Therefore, if you're seeking an investment that will provide you with consistent returns, you should probably go elsewhere. The cryptocurrency market is driven in large part by speculation, and the fact that it is relatively small makes it more susceptible to price swing. This, in turn, can wreak havoc with the value of coins, which is one of the primary drawbacks of utilizing a cryptocurrency like Bitcoin. Number 3. The viability of investing in cryptocurrencies over the long run has not been demonstrated. It is important to keep in mind that virtual currencies have only existed for just more than 10 years, despite the fact that they have gained widespread recognition and continue to see popularity growth. After the publication of a white paper on Bitcoin in 2008, the idea didn't start to gain traction until much later. In contrast, the history of stock markets may be traced back hundreds of years. As an illustration, the London Stock Exchange was established in 1801. For millennia, gold has demonstrated its reliability as a store of value. But cryptocurrency, as an investor, you need to have a lot of courage to wade into the undiscovered waters of cryptocurrency's uncertain future. Nobody really knows what will happen to them in the future. Number 4. There are significant problems with the scalability of crypto. You might be forgiven for assuming that digital currencies work at the speed of light because to some extent they do, but only to some degree. However, once they reach a certain level, they begin to have significant problems that make it challenging to implement them on a large scale. The suppliers of cryptocurrencies themselves acknowledge that this is a problem. For example, the creators behind Ethereum have stated that the blockchain has reached certain capacity limitations that delay the rate at which transactions may be executed. The parties in the transaction may find this to be an extremely frustrating process, and that's before considering the potential financial damages it may entail. Number 5. People who are new to cryptography are more likely to make security mistakes. Even if cryptocurrencies don't have the same security concerns as using centralized intermediaries, this does not mean that there aren't any security concerns at all with regard to cryptocurrencies. If you possess cryptocurrency, you run the risk of losing the private key that gives you access to your currencies, and with them, all of your assets. Then there are illegal activities such as hacking, phishing, and any and all other attempts to gain control through unethical means. Experienced investors are aware of this risk factor and take precautions to avoid it. But inexperienced investors are more likely to fall prey to the various pitfalls that exist. Which digital currency makes the most sense to put money into right now? There is not a single cryptocurrency that is noticeably superior to the others in any meaningful way. It boils down to a matter of personal preference, but there are a few things that you should keep an eye out for. Consider how comfortable you are with taking risks. Can you afford to lose a sizable portion of your money if the price of the cryptocurrency you've decided to invest in drops? Do you intend to use the currency only for the purpose of generating returns, or do you also intend to use it to pay for other things? Is it only about the money, or are you hoping to invest in a currency that will have a larger influence on society or the environment? One simple strategy is to go with Bitcoin, which is now the market leader. It is the first cryptocurrency ever created, and it is also the one that has amassed the most information throughout the course of its existence. Now, that's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up and do not forget to subscribe. Thanks for watching. See you next time.